Welcome to the final video of the accounting series. In these last few videos, what we have done is consider how an accountant looks at a company. We learned about value, we learned about the accounting equation, and we know how to analyze and properly record transactions. All of these things were accumulating to this point to communicate the value of our company, which we do through financial statements. The financial statements tell the story of the company. We need to make sure that they're legible so other people can pick them up and read them. We want other people to be able to read them so they can make important decisions regarding your company. In the company program, we focus on three major financial statements. That's the income statement, the statement of changes in equity, as well as the balance sheet. The income statement shows whether or not we made a profit in our company. At this point, you know that you got to spend money to make money, and what the income statement shows us is whether or not you made more money than you spent. To make an income statement, what we do is go to our ledger. We're going to write down the balance of all of our revenue accounts. We then write down the balance of all of our expense accounts and respectively add them up. Whatever the difference between the revenue and expenses are is your profit. If you had more revenue than expenses, that's a profit. If it's the opposite and you had more expenses than revenue, then unfortunately, you're at a loss. We write our profit or loss at the bottom. The thing with income statements is that it looks at a period of time. So the question it answers is how much money did you make or lose over a specific range of time. The statement of changes in equity is a mouthful to say, but what it does is highlights the owner's stake in the company. It shows you how much money they put in, and it also shows you how much of your final profit they're entitled to. The balance sheet is a representation of the accounting equation. It shows the current balance of all your different assets, liabilities, and equity. Again, it's called the balance sheet because the accounting equation and the value of these accounts always have to be in balance. One way to think about the balance sheet is to consider it as a picture. It's a snapshot of your company at a specific point in time. When all of your accounts are closed, a quick check to make sure you've entered all your transactions correctly is to apply it to the accounting equation or put it in the balance sheet. So we're going to note down all of our asset accounts and get their total value. And then we're going to do that for the same on our liability and equity side. If they're matched, that means you've done everything correctly. It's perfectly balanced, as all things should be. If you've been recording your transactions consistently and accurately throughout the company program, making all of the financial statements is no problem at all. All you're really doing is summarizing all of the different accounts and noting down their final balance at the end. Again, we're making all of our entries in the ledger as we go along. So when we're making the financial statements, all you have to do is pull that final value to know what you have to put down. I've seen it too many times. The company program is wrapping up and students are pulling the hair out of their heads because they're frustrated because they can't properly make their financial statements. Don't let this be you. Do all of your accounting consistently as you go along the company program. You're going to thank me for it later. Students, that's been the accounting series. I hope watching these videos has been a bit demystifying for you. Regardless about how you feel about accounting now, practice. Like I said in an earlier video, accounting is not a spectator sport. You have to get in there and play. And students, company program is a great way for you to not only play this game, but also start writing the story of your own business. As always, you can definitely talk to your mentors about how to do accounting. They have a lot more exposure to this area and they can help you write down and document certain transactions as you're going along. I'm also available if you have specific questions, and you can just reach me through the email address where I've been sending you updates. That's all. I hope you feel a bit more prepared and ready to take on this role. Thank you so much for watching this video series. I'll see you soon.